Today, Bitcoin wrestles with the $90,000 mark to kick off the week. BlackRock files for a staked Ether ETF, and the Wolf of Wall Street's host, Scott Melker, breaks down what's driving the crypto market as we head into year-end. Welcome to CNBC's Crypto World. I'm Mackenzie Sigalos. Major cryptocurrencies are in the green to kick off the week as investors await the Fed's last meeting of this year later this week. Bitcoin, it's pretty much unchanged, still trading just below that $90,000 level. Ether climbed more than 2%, and XRP rose by 0.5%. Now, the moves come as investors fret about the state of inflation and whether the central bank will keep lowering rates in 2026. Okay, let's zoom in on Ether as we take a look at the top stories. BlackRock, it filed an application with the SEC to offer a staked Ether ETF. A Friday filing with the agency reveals that the world's largest asset manager is proposing an iShares staked Ethereum Trust ETF that would trade on the NASDAQ under ticker ETHB. This would be in addition to BlackRock's other crypto-tied funds, including its iShares Ethereum Trust that does not include staking. That fund was launched in 2024. Now, earlier that year, BlackRock and other issuers' spot Bitcoin ETFs began trading in the US. That opened the floodgates for other crypto ETFs here in America. Now, at the time, BlackRock's filing signaled major optimism among other issuers, some of which had failed to get a spot Bitcoin ETF listed in the past. Next, the SEC is closing another of its Biden-era crypto and Web3 investigations. Real-world asset tokenization platform Ondo Finance announced today that the agency ended its probe into the firm without any charges. Now, this move could signal a more welcome attitude toward tokenized assets in U.S. markets. In Ondo's announcement on X, the company calls the outcome an important milestone for the entire tokenization ecosystem. Ondo also said that it plans to hold a summit in February, laying out what's next for the company. Last, Binance landed a regulatory win in Abu Dhabi. Today, the crypto exchange announced that Abu Dhabi's Financial Services Regulatory Authority had granted licenses to 3 of its entities covering exchange, clearing, and brokerage functions. In a statement, Binance's co-CEO Richard Tang said that achieving regulatory status through Abu Dhabi Global Markets Framework reflects the company's deep commitment to compliance, transparency, and user protection. He added that the license provides regulatory clarity and legitimacy, enabling Binance to support its global operations from ADGM. Tang also said this regulatory foundation offers users peace of mind, knowing that Binance operates under a globally recognized gold standard framework. Binance's presence in the region coincides with Abu Dhabi's ambition to position itself as a global crypto hub. All right, back to markets for our main story. I spoke with Scott Melker, investor, analyst, and host of the podcast The Wolf of Wall Streets, about what factors are driving markets right now. He also weighs in on all the new crypto ETFs coming up in the U.S., like BlackRock's newly proposed staked ETH fund. So Bitcoin once again bouncing between the low 90s and the high 80s. I'm wondering what your reaction is to Bitcoin's performance right now and what's driving this push and pull.
It seems to be that there are two camps right now as to what's happening with Bitcoin price action, and they're very bipolar. We have the 4-year cycle advocates who think we're going into an extended 3-year bear market and that the top is in. And then we have the others, which I would say is my camp, that point out that we get 30% or even more corrections every single bull market 6 or 7 times, and this doesn't seem particularly different than that. So for me, this seems like a pause in the bull market for Bitcoin. We have incredible tailwinds still, obviously, with treasury companies buying and ETFs and flows and unlocks for new platforms. I really can't imagine that the top is in for multiple years right now. I think that we're just seeing one of those boring sideways periods that drive people absolutely insane.
And then it was just about 3 weeks ago that Bitcoin triggered a death cross. How significant are those types of technical indicators, especially because price movements have evolved since we've seen the introduction of the spot Bitcoin ETFs? They've seemed to change this 4-year cycle that had traditionally governed the way that the price of cryptocurrencies moved.
I love technical analysis, but I view it as a risk management tool, certainly not as a crystal ball for what's likely to happen. But when you do look at it, I can see the argument for at least a temporary top being in. The 50 MA on the weekly is a key level that a lot of people watch for mean reversion. Bitcoin is trading below that 50 MA on the weekly right now, which has actually never happened in a bull market. So if you're looking at technicals, a breakdown of the 50 MA usually sends price to the 200 MA. It's happened every single cycle so far. That's around $56,000 right now. So I think that scares a lot of technical traders who are probably looking at those levels. But that said, there's a push and pull with those normal bull market retracements that we've seen before. I do think the end of the year here will be a bit crucial. I think we would love to see a Santa Claus rally across markets and certainly a bit of momentum and maybe some tailwinds and narrative. But right now, I think if you zoom out a year or two, you'd be pretty excited to see $91,000 Bitcoin at the end of 2025.
Now, a big part of this sell-off narrative are all those forced liquidations. Is the worst of that over?
I would have to imagine that the worst of that is over, at least in the broader crypto market beyond Bitcoin. Obviously, we had a massive liquidation event on October 10th. It was mostly on offshore leverage exchanges that effectively broke. We saw over $19 billion liquidated in a single day. To put that in context, that's about 12 times larger than the liquidations that we saw the day the FTX collapsed. So a massive event, 1.1 million roughly is the estimate individual accounts were liquidated on offshore exchanges. That's a lot of people who were very deeply active in the crypto market who lost their entire account on that day. And I think it takes a while after an event like that to see the bodies float to the surface. And there's a lot of conjecture that there could have been institutions, even exchanges that effectively blew up or tried to fill holes in the background, but we haven't seen real credible evidence of that. That said, even on these small moves, we see 100, 200, 500, a billion in liquidations in any given period, showing that there's still plenty of leverage in the market and still plenty of money trading. I would say if we're more concerned about unwinds right now, maybe it would be in the digital asset treasury space. The MicroStrategy or strategy wannabes that bought Bitcoin at the top and are now holding on for dear life. We'll see what happens with them, but I would imagine actually that rather than being forced to liquidate, we would see them merge or be acquired by the larger players who would be happy to buy their Bitcoin at a discount.
Now, speaking of the DATs, Tom Lee spoke about the liquidation event last month, and he said that a lot of market makers were taken out. Have you seen signs of that?
That was the initial conjecture, but we really haven't seen a signal that that actually happened. There was some reason to believe that might have been the case only because that amount of size and those level of swings means that the market makers at least were not able to do their job during that event. Now, whether that was a result of their bad practices or not having enough liquidity or the exchanges is the question that remains, but it seems that there was a phenomenon called automatic deleveraging that happened across these leverage exchanges, Binance in particular being the largest at the time, where effectively market makers' positions were forced closed. And so they actually couldn't provide a spread because the systems on Binance or these exchanges kicked in and basically closed their positions. That eliminated the demand on the floor, and you saw some of these things literally go down 99% in theory on paper before bouncing all the way back. It just shows how thin the books are when the market makers aren't there.
And then one quick follow-up question about a point you just made, that we might see this imminent M&A action with those digital asset treasury companies. Are you aware or having conversations behind closed doors about potential targets? So, I think on the Ether side of BitMine Immersion, Tom Lee's company, and then of course on the Bitcoin side, there are a few vehicles that have looked to mimic what Strategy is doing. But are there any ideal targets that people are chatting about now?
I think so. So Vivek Ramaswamy's company Strive was publicly announcing that they were looking at buying Semler Scientific, which is one of the first Bitcoin treasury companies. There was a lot of conjecture as to what that would look like. We don't really know as far as I've seen, but that's a pretty good example of a well-capitalized, larger digital asset treasury company potentially buying a smaller one. I think we're going to see that across the space. There's obviously on the Bitcoin side, the big names I would argue are Strategy, potentially Strive, 21, which is, Jack Mallers with Tether and SoftBank and Cantor. They're pretty well capitalized. I would imagine that they've got their eye on some targets. And of course, Kindly MD, which is Nakamoto, has talked about buying potentially cash flowing businesses to strengthen their balance sheet, be able to buy more Bitcoin. And they've talked about the regulatory arbitrage opportunities of basically launching these in jurisdictions that don't have access to ETFs and don't already have treasury companies, kind of like a Metaplanet in Japan. For those who weren't aware, when that launched, Japanese institutional investors had no other way to get exposure to Bitcoin, right? And also, if they did buy Bitcoin, the taxes on it were much higher than simply buying a company. So there was these huge advantages for Metaplanet, and that went exceptionally well for a very long time. So looking for jurisdictions like that around the world where they can launch these, that may be another sort of play that we see from these digital asset treasury companies.
And we spoke to the Blockchain Association on Friday, which is pushing Congress to move forward market structure legislation. Crypto regulation, of course, has been a positive catalyst for the industry in the past. And I'm wondering if it will be again if we see some momentum there, or if that's all priced in at this point.
I think what we've seen so far was largely priced in. We had so many massive campaign promises and such a pendulum swing from the previous administration to the current one. I think literally just getting rid of Elizabeth Warren and Gary Gensler and friends was the tailwind that probably sent price where it went as far as we've seen. The Genius Act obviously was a huge catalyst for the stablecoin industry and for tokenization of real world assets. But now we need to see the Clarity Act, which is market structure as you define. We need a very clear definition, not from the regulators, but from legislators, so it can't be changed. From legislators on what's a security, what's a commodity, what behaviors these exchanges can even behave in. Can they be the exchange, the market maker, the custodian, or do we need walls between those? What will that look like? So there's still a lot of question marks for the industry, and I think people are getting antsy to see that clarity before midterms and before it ceases to be a priority. So I do think if you're looking for a catalyst that might send crypto higher, especially beyond Bitcoin, passing of the Clarity Act could be what does that. And of course, we still have the Strategic Bitcoin Reserve and quite a few other laws potentially coming down the pipe.
Bitcoin and Ether are both down single digits for 2025. Do you think that the crypto market sees a turnaround before the end of the year, or are we headed for a decline in 2025?
It's hard to know. It's hard to predict that things will change much in this sort of low liquidity holiday environment. And we know that people are largely closing their books here. As I mentioned before, maybe we'll get a Santa Claus rally. But I think that choosing, the year itself, which we all do, it's a natural way to do it, is a bit of an arbitrary time frame. I mean, I think the best place to probably peg these assets to is when Donald Trump won the election. That was a much more fundamental change than, New Year's 2025, I would say, for the crypto industry. And obviously, we're still up massively from that time across the board. So I think now, as I mentioned, we need to see further delivery of the promises that we saw at the beginning of that administration and during the campaign to really see it continue flying. But I do believe, actually, that 2026 will generally be a positive year, barring any black swans in macro.
Shifting gears in ETF news, we have BlackRock filing to create a staked Ether ETF. And this is what the industry has really been pushing for, these staked products as a way to drive adoption. Do you think that the addition of staking will bring investors to this new offering if approved?
I do. I think it will absolutely be huge. Now, we actually saw a period not so long ago, largely with obviously Tom Lee as a trigger, where Ethereum ETFs were outperforming Bitcoin ETFs for long periods of time. And now we've actually seen Solana and XRP ETFs outperforming the Ethereum and the Bitcoin ETFs since they launched because they're new and there's interest in them. But the Solana ETF was the first one really to launch with staking. And there was huge institutional appetite for that. I mean, for people who don't understand it, it's effectively just tagging a yield onto these products. And right now, to own an Ethereum ETF, you're not getting the yield that's native to Ethereum. If you just go stake your Ethereum yourself and buy the native asset, you can get 3-4%. Solana can be 8, 9, 10% depending on where you do it. So having no staking versus staking in these actual products is a really huge difference.
Okay, that's all for Crypto World today, but we'll be back again tomorrow, and we'll see you then.